889-5600.
Now, from the Signature Bank Studios, this is Chicago's Morning Answer with Dan Proft on AM 560. The Answer.
Top of the morning, Dan Proft here. So the end of all white-collar jobs in the next 18 months seems to be a little bit behind pace, given the jobs numbers you just heard at the top of the hour, including May jobs, 172,000 new jobs created, which was more than double the Wall Street estimates. I found this exchange that Mark Andreessen had, the great venture capitalist, had with Joe Rogan on AI during his last appearance. Rather interesting, talking about the difference in approach to the development of AI and AI-driven businesses under the previous administration as compared to the current one.
The AI thing was very alarming. We had meetings this spring that were the most alarming meetings I've ever been in, where they were taking us through their plans, and it was
like what kind of? Can you talk about it?
Basically, just full government control, like this sort of thing. There will be a small number of large companies that will be completely regulated and controlled by the government. They told us. They just said, don't even start startups. Like, don't even bother. Like, there's just no way. There's no way that they can succeed. There's no way that we're going to permit that to happen.
Wow.
Yeah, they said this is already over. It's going to be 2 or 3 companies, and we're going to control them, and that's that. Like, this is already finished.
Oh my God! Now, when you leave a meeting like that, what do?
You go endorse Donald Trump.
Yeah, things could have been a lot different if the big guy's proxy Kamala had gotten elected, huh? We're just going to designate a couple, 3 big companies that control everything. You mean like health insurance? How's that going? For more on the jobs numbers and the economic outlook, pleased to be joined by James Perry, who's the founder and CIO of Perry International Capital Partners, of course. Jim, thanks for joining us, as always. Appreciate it.
You're welcome, Dan. Thank you. Happy Friday.
So the jobs number, what say you?
Well, it's pretty good. I mean, as expected, we gained 172,000 jobs in the month, and last month was revised up to 179. The revisions for the last 2 months were up 93, so almost another 100. So no surprise to see the unemployment rate very steady and very low at 4.3%, which is just about as close to full employment as you can get.
And so what does that say about the underlying strength of the economy? We've heard a lot about a lot of rosy scenarios in terms of GDP growth the next couple of quarters, profitability of corporate America. And yet we still have a lot of people that have economic anxiety. Well, more than that, really have a negative outlook on the American economy. So how do you explain those seeming contradictions?
Well, they are contradictions, and it's an indictment on what's going on in personal wealth and those who own assets and those who don't, If you're working paycheck to paycheck, you're falling behind inflation because the average price of a gallon of gasoline today not nationally, is $4.22. Last year it was $1 lower, and 10 years ago, or actually in 2010, it was under $3, and of course in 1970 it was $36 a gallon. So gasoline prices and healthcare prices and all the service prices that the average household has to pay, those prices are going up, and these people have a disposable income problem that is under pressure every single month. And the only people that are doing better, which is, the top sort of 25% of households, are those that own assets, their house, and they own stocks. And that's not going to change anytime soon. And the problem with the Gulf now and the oil flow is that oil is still $90 a barrel. The good thing is that the price of a gallon of gasoline is down 25% since March, so that's good. It's I think wholesale price is the best way to look at that, but they were at $3.90 on the wholesale level, and now they're at $3.05. So oil prices are going down, and I think the angst about Iran and free flow of oil through the strait is going away.
Scott Bessent, Treasury Secretary, House Committee hearing, had this exchange with California. Of course, she's from California. California Representative Judy Sue about this this very topic that people are not optimistic. The majority of Americans not optimistic about the direction of the country, mainly because they're not optimistic about their financial future right now. And Judy Sue, you'll take a judicial notice of, not exactly a student of American history, but the point that Bessent is trying to make here is the important one. Take a listen.
Recently, President Trump proudly claimed that he doesn't think about Americans' financial situation when it comes to the war with Iran. So I want to ask you, Secretary Bessent, do you agree with President Trump that you also do not care about Americans' financial situations?
Congresswoman, who was the president during World War I?
Can you?
No,
are you refusing to answer my question?
No, I'm asking, who was the president during World War I?
I don't know, but clearly you
So
are
you
not
don't know who the
answering my
president during
question.
World War I was.
So,
But let me tell
so
you.
I'm clearly getting the idea that you do not want to answer whether you agree with President Trump that you do not care about Americans' financial situations.
President Trump does care about Americans' financial situation.
Well, he actually said that he doesn't.
No, that is a truncated thing, like everything is, that he is future-proofing, because I can tell you Americans' financial situations would be devastated if Iran got a nuclear weapon and there was a permanent shutdown of the flow of energy out of the Middle East.
Well, then let me ask you, was your prediction...
I promise you that
I'm taking my time back.
I will promise you that President Woodrow Wilson, who was president during World War I, the Germans did not attack us. That he got into that. It was
Well, you're not answering the question, so let me ask this. And I guarantee was your prediction that Americans would face only 50 days of temporary elevated prices wrong?
I mean, she's such an idiot, obviously, and this whole just setting aside all the grade school, like I care and you don't care nonsense.
Right.
The point he was trying to get at is the geopolitical context of things, and by the way, you want to get into it. I mean, Trump signed an executive order surging $1 billion in of Defense Production Act for coal plants. We're done with the silly Green New Deal, backdoor Green New Deal policies when it comes to energy. But that's you're looking at America's medium and long term energy security and the energy security of the Western nation, of the Western world, basically. And that context is what you have to bring to the table if you want to understand what's going on and think, beyond the end of your nose.
Right. Yeah, but people like this, they're just stupid, and they get a pulpit, and they believe that they have the right to bark to the people that listen to them, and it really isn't based on any reality at all. So I think it's not even worth talking about people like that. But I think the broader picture really is, and to Scott Bessent's point, who I think is a terrific guy and a very, very smart guy, and he's handled his situation and position very well. But, this whole Persian Gulf, Middle Eastern crisis conflict is really about no nukes in Iran. And they don't have them now, that's for sure. But Trump wants to make sure that they don't ever. And what I think is interesting, and we talked about this a few weeks ago, Dan, I said, we're all oil traders now, right? The S&P was kind of correlated to oil, and the downtrade in March was severe because oil was going straight up. But since April 1st, which is the day the Artemis II rocket took off, the market took off, kind of nice little sort of correlation. But the optimism in this country is much higher than the rest of the world. And I've got an international business, so most of the people I talk to in Europe and the Middle East and Asia, they're really bearish, and they don't like Trump, and they don't like what they see on TV. I just tell them, don't watch the news. Media is entertainment, and entertainment gets paid, and everybody's barking to their constituents. But the broad picture is that, the U.S. economy is doing very well. To your point about GDP growth the rest of the year, the Atlanta Fed is talking about a 3% growth rate in Q2, 4% in Q3, and 5% in Q4, right? And first quarter was about 1.7% or something, and the government was closed for, 2 months, something like that. So I think people have to really look, and I talk to investors, right? Your show is a broader story, but investors believe oil prices will be down by the end of the summer. Back month oil contracts are trading even next summer at below $7 a barrel, right? And oil traders, they're in the Middle East. They know what the floating supply is. The price of oil is determined by the amount of oil that is on the surface of the earth. And a lot of it's stuck in the Gulf, a lot of it's Iranian. But the fact is that oil is flowing. And I think that the U.S. is probably in the best position of any region or nation on earth because we are essentially independent for oil production and energy production, and nobody else can say that.
What were those dire predictions from Exxon and Chevron last week about coming price spikes because we're getting to a point where you can't just sort of prop up supply by pulling from strategic petroleum reserves?
Well, yeah, I think that's right. And these oil guys, they talk their book. And remember, Exxon's a global company, so they're drilling oil in just about every region on the earth. And there are bottlenecks and there are problems about getting oil around in Asia and the Middle East and in Europe. But and I think that Europe is in trouble. I think that Asia is in trouble. India has been importing oil from Venezuela, and there's been a parade of super tankers going from China and Japan to the Gulf region, the Gulf of America, to get oil. So I think there are dislocations now. I don't think that they're going to be solved anytime in the very short future. This strait would be useful to have it open, but it hurts other people more than us. And I really do think that the U.S. economy is much better positioned than any region on earth for economic growth going forward.
This story from the Journal: private credit firms tightening their lending standards, increasing interest rates and other fees they charge on new loans, and restraining how much debt they give borrowers, and as well as closing loopholes that allow financing to be taken out against borrowers' assets. So what does that tightening up of private credit mean?
Good question. I kind of had a feeling you were going to ask me that today because I get it every day, right? The private credit issue. And I will tell you that it makes a lot of headlines, right? Again, headlines fell. But the bottom line is private credit, I think, is largely misunderstood by the media and the financial press. Private credit is really just a loan that is made outside of the banking system, right? These are the shadow banking system, the shadow financial system in this country is bigger than the banking system. And the fact that Blackstone, for example, Blackstone is one of the larger private credit stories. There was a story yesterday about Blackstone that said, oh gosh, they have a $87 billion private credit fund and investors want their money back and they are going to redeem 2.5% of a $87 billion fund, and it made all the headlines. And then you kind of look at it and go, well, number one, Blackstone was the best performing stock in the market yesterday. It's selling at a price earnings multiple of 30, which is 25% or 30% higher than the average market. And the bottom line is this company's got $1.3 trillion under management, right? And they're talking about $1.9 billion of redemptions out of an $87 million fund. That $87 billion fund is 6% of their total, and the redemption is 2.4% of that. So you're talking about peanuts here, really. I mean, these guys could pay that redemption fee out of their pocket. The private credit situation in this country is not going to be anything that changes the liquidity in the financial system and is not a threat to the U.S. economy or the U.S. stock market. It's that simple.
Well, going back to the investors you talk to around the globe and how cynical they are about their economic fortunes right now in Asia and Europe, and combine that with, because I think this is probably part of it, right, is they've got an energy supply issue in a way that America doesn't, in part because of the strait being offline.
Right.
So what happens if that persists through the end of the summer and China's economy and the European economy start to really falter? I mean, can America be looking forward to 3 and 4 and 5% GDP growth if you've got Western Europe and Asia, including the Chinese communists, flailing?
Right. Well, there's a lot to unpack on that whole story because it's a big one. But the short answer is I think that China and Europe have been floundering for a decade. I think they will be floundering for a decade more. Part of that story is energy, but the other part of it is that the governments there are just spending so much money to try to keep GDP positive rather than negative because they've got so many claims on the assets and the growth that they have. What I will say is about the opinions and all the sort of chirping that you hear from investors and the media. I'll give you a quick story here, and I wasn't thinking about talking about this today, so my numbers aren't exactly right, but there's a series of data that comes out from the University of Michigan, right? It's a consumer sentiment survey, and Bloomberg reports it, and it came out, 10 days ago, and they said that the University of Michigan confidence number at 35% is the lowest in a generation, and it speaks volumes about the administration and the way the economy and the government is moving forward. So that's the number they print, 35%. But if you look at it, it's really bifurcated. The number that's 35% is Democratic voters. And the Republican voters in the same survey, on the same report, optimism is at 87%, right?
Yeah,
so
right.
Don't let
just another referendum on Trump, basically.
It's a referendum on Trump and whether you watch CNN or Fox News, which is why I watch them both. You got to find the truth somewhere. But the point is that people's political opinions tend to shadow or tend to cover their investment decisions. And all of the people that are negative, including many of my institutional investors in Europe, have missed this entire rally. I had a guy, pension fund manager in Stockholm in April of last year during the tariff tantrum said, I'm never going to buy another U.S. asset again. I'm not going to buy the dollar. The U.S. economy is ruined, and you will never see a dollar flowing from Europe to U.S. ever again. Well, meanwhile, the S&P is up 100% since then, right? The NASDAQ's up more than that. And so there's a lot of people over there that are completely missing the real story here, and that is that earnings growth drives equity prices. And just to kind of finish that little comment, earnings growth, Dan, at the S&P 500 level in Q1 was up 27.7%, right? That's twice as much as last quarter, which was up sort of 15.5. This is an enormous number. And if you look at the technology sector that's really driving this thing, I mean, let's face it, we're in an AI CapEx super cycle, the likes of which we really haven't seen since the spending in World War II and the Industrial Revolution and railroads and all that sort of stuff. So the AI CapEx super cycle of spending is driving the U.S. economy. Make no bones about it. And the fact is that go ahead. Sorry.
No, and with these high-profile IPOs coming out, it's only going to continue. Is that your view?
I really do think that's right. I mean, SpaceX is always on paper, every day, and the IPO is coming next week. It's going to be a $75 billion IPO, which is great. The market sets a percentage of the total value of the company, which is about a little bit less than $2 trillion, and maybe it's $3 trillion, who knows? But the funny thing that people kind of forget is, last week, Google announced that they are going to issue $85 billion worth of new stock, right? So these companies are raising money because they're spending money because their revenues are coming, right? NVIDIA's earnings in Q1 were up 300% from Q1 25. 300%.
Wow.
The Mag 7 earnings in Q1 from 26 to Q1 from Q1 2025 were up 63%, right? And what's interesting, and the S&P, as I said, was up 27.7, but the other 493 S&P companies that are not in the Mag 7, their aggregate earnings number were up 17.4%. So the point is that the earnings growth and the broadness of the economic expansion is actually increasing. So this is really bullish, right?
Yeah, if those numbers aren't bullish, I don't know what bullish is, right?
I know. I mean, but the numbers are in front of everybody's noses every day, yet you don't hear anything about it from any news network or even the Wall Street Journal, for heaven's sakes, which I can hardly read anymore. But the economy is doing really well, and corporate America has pricing power, right? They really do. Profit margins at the S&P 500 are about 16 or 17% in the quarter. That's phenomenal. I don't think it's ever happened before, right? So if you own stocks, you're happy, and you're if you own real estate, you're happy. There's another piece, and I don't mean to keep going here, but it bears noting. We've talked about this before. So, the U.S. economy is sort of a $33 trillion. Value of the stock market's kind of $65 trillion. National debt, as we know, is $39. But private wealth in this country, Dan, was $170 trillion a year ago, right? 100 or maybe 18 months ago. I looked at this number last night because I was thinking about talking with you about this. Private wealth in this country is $200 trillion, right? 200 trillion. It's up about 30 trillion in the last 6 months, right?
Yeah.
This is wealth. This is private wealth. And that's why consumer spending continues to drive GDP and why there's so much money available from the private credit place. Any company that's an insurance company or a pension, they're tripping over each other to buy these deals to fund these data centers because the earnings are so good, right? And the revenues on these structures are so good, and Wall Street's really happy to facilitate it. So
until Mamdani seizes their property and Bernie seizes their businesses, at least. Yeah.
Well, again, these guys are knuckleheads, and they aren't representative of what's really going on out there in the real economy, and they have no idea what economics even are, let alone earnings rate. So, you never hear them talk about an AI, CapEx, industrial revolution, or what's going good in this economy. The industrial, technological expertise and the entrepreneurial focus of businesses for profit in this country are lapping the rest of the world. So if you're an investor, the best thing you can do is have a portion of your money in the S&P 500. And the SpaceX deal, by the way, which is coming next week, what's interesting about that, I've had a bunch of calls. Oh, my gosh, the stock market's going to go down 20% because there's so much money going to come out of the rest of the stock market to buy SpaceX, and it's going to be a disaster. And I said, what are you talking about? The SpaceX deal is already placed, for one, and it's going to unleash an incredible amount of wealth in the country for more spending. And the fact is, it's not going to even enter the S&P for another year, right? So the idea that somehow you're going to look at this SpaceX deal as a negative thing for the U.S. economy or the stock market, again, it's sort of like, that's why 35% of Democrats are bullish on the world, and 85% of Republicans are, because these guys they don't like Elon Musk. They don't like technology. They're afraid of AI. Job growth is going to go collapsing. Everybody's going to be unemployed, and it's a dystopian world. And I said, get your head out of the weeds. You're missing the idea that we've never spent more money, and the industrial revolution that is taking place here is being funded in part by the U.S. government that believes this is a matter of national security, and it is. So I think the U.S. economy is going to do well, and the stock market's going to do well also.
All right. Happy days are here again, at least if you're a Republican. Jim Perry, founder, CIO, Perry International Capital Partners. Jim, thanks as always. Appreciate it.
Thanks, Dan. Have a good weekend.
You too. And he joined us on the alphawealthgroup.com answer line.
The stories you need to know to start your day. This is Chicago's Morning Answer on AM 560. The Answer.
Each morning, the newsmakers and the newsbreakers shaping today's conversation are heard on the alphawealthgroup.com answer line on Chicago's Morning Answer. When you need answers about what's happening in your world, you turn to AM 560 The Answer. And when you need answers about how to prepare for and protect your retirement, you turn